The market moves on mainly two things, earnings and interest rates. And that's where I try to focus specifically on those and shut out a lot of the politics and the noise and so forth, because that's not as big of a factor in driving the markets. And what's interesting is we have a very similar backdrop still now to this day.
Yeah, so then that would imply, Joe, that you're still optimistic. Then a year from now, I don't want to put you too much on the spot. It's hard to make great calls all the time. We get that, but sounds like you're still bullish.
Yeah, over the next 6 to 12 months, I'm bullish for three main reasons: the very strong technicals, the improving fundamentals, and we're still in this low interest rate, equity friendly environment that's very strong for stocks. Now, my only concern short term is that the extreme bullish sentiment. So I follow a lot of different sentiment measures, and they're all showing that people are all in and very optimistic on the markets. That doesn't mean that we have to drop short term. It just could mean that maybe we stall out a little bit to wear out some of that bullish sentiment. But over the next 6 to 12 months, I'm bullish for mainly because of the strong technicals, which I'm happy to get into some of the signals we've seen.
Yeah, and I think we'll hit that in just a second, but I think your point is well taken. I mean, listen, we have a lot to be thankful for given all this vaccine news that's coming out, certainly, but and maybe a Goldilocks outcome from the markets from a political perspective, not making a comment either way, just saying kind of the stasis idea is what the market tends to like. And, you know, but I agree with you, Joe. Everybody seems wildly bullish. Strategists are tripping over themselves to raise their price targets. That alone makes me a little bit nervous.
Yeah, I mean, that's just more, that's why I encourage the viewers to know their time frame. Some people are traders, some people are investors. So that's just something to consider, just shorter term, that everyone's wildly bullish. But just to review what's happened so far this year, we had a bear market in March. And keep in mind, not all bear markets have to be like 08 and 09. They come in different flavors. And then the Fed stepped in immediately, and we had a strong run right into September. What's very interesting is during September and October, we had some very unusual strength that's rare to see in the markets beneath the surface. Specifically, early October was one of those breadth thrust indicators that the viewers can Google. It was developed by the great Marty Zweig, which basically goes from an oversold condition to a very strong technical condition. And the second one was in the week of the election in early November. There were 3 days where the S&P was up at least 1.5% in a row. And those statistics, it's happened 9 times since 1970, show that the market's up 14% on average 6 months later and 22% on average 12 months later.
Shepard Smith here. Thanks for watching CNBC on YouTube.